what about, emotional control when you do lose?
So what you need to do is withdraw the emotion from your decisions. The stock market isn't your friend. The things that you buy aren't your buddies. Take the emotional attachment away from currencies or stocks or companies. They are not your mates. They are there to make you money. That is it. I would say one of the most important things is don't bet your life savings in the markets. Only bet what you can afford to lose. And then straight away you take the emotional attachment out of it. I was in Manchester for BBC Breakfast, a few months ago, and I was chatting to a cabbie who'd put his entire life savings, £15,000. You can tell this story is not going to go well. £15,000 in some tiny oil and exploration company in Russia. This was pre the sanctions. And I almost didn't know where to start. And of course, he was so emotionally involved in this one stock. He could tell me where it had traded almost every second of the day since he bought it. But that's the problem. He had bet his life savings on it, £15,000. And so, of course, he was emotionally attached to this decision. And he was exhibiting all the investor biases, the behavioural biases that we've talked about. And he wouldn't sell at a loss because it had been in the profit in the past. He had doubled his money in the past, and therefore he was waiting for that to happen again. And I dread to think how much money he's lost now. So only play with the money that you can afford to lose, and straight away you'll be much less emotionally attached to any financial decisions you make. So the two things I would be very wary of are emotions and risk. As I said, risk, control of risk, not blowing your capital up. Your capital is to be treasured. It's to be preserved. It's to be looked after as well as it took you to create. Because building up capital, building up savings, for most people is really quite hard work. Paying off your mortgage, the savings at the end of the month, after all your expenses are really quite small. The amount that you can save. Therefore, if it takes you a year to create, £5,000-10,000, protect that capital with the knowledge that it's taken you a year to build up. Often people will spend a long time building up their capital and then just wee it out the door in 1 week. No, protect that capital, treasure it, look after it. Control of risk is very important. A friend of mine runs his own trading training business. And he was talking about one of his trading trainees. And he said, she didn't have discipline. She was trading FX on one of these many FX trading sites. And she didn't have discipline. She hadn't learned how to trade properly. And she didn't stop loss. She didn't get out of a losing position. And she was basically trading all her capital on one position. Again, poor risk management, poor judgment. And what she did is she kept holding on. She had that emotional attachment to the position. She was, knew that she had been in winning at some point, therefore couldn't take a loss on it, whatever. All the emotional biases that we talk about. And the markets turned her way and she got out in the end at a large profit. Now, what he said to me, and I completely agree with him, is actually that was a very bad lesson for her, because what she's learned is that actually she can hold on to a loss-making position and the markets can turn and she can make a load of money. And actually that's a bad lesson to learn because it's taught her not to be religious on cost control. And I think that's one of when you're first learning to trade, that short term may be a great thing for you that you've got out a loss-making position. But if you haven't experienced the pain, then you're not going to learn properly. Sometimes you've got to take the financial plane to really learn how to understand, to preserve your capital.